The 5 most common reasons that buyers back out of a sale. And this is going to be key because one of these reasons actually might be a legitimate reason why you, as a potential home buyer, may want to back out of the contract that you get under when you're looking to purchase a home as well. So we're going to jump straight into this. It's coming from a article, actually a Yahoo article. And the first reason they gave, these are in no particular order, is that the appraisal comes in low. That is actually one of the reasons that I would put as why someone should not back out of a contract. That is when you should put on your negotiation hat, and now you've got some options, in my opinion. An appraisal coming in low, in my opinion, only benefits the buyer for the most part. I won't say all the time, but I'll say for the most part, it typically benefits the buyer because it indicates that, hey, you've got a house that's not worth what you're currently paying or under contract to pay for it. So let's say you get under contract for that home for $400,000, appraisal comes in at $380. Now it's like, okay, well, that's to your benefit. You were about to overpay $20,000 for that home. Now you're not going to overpay $20,000. So you can negotiate that price down $20,000. You can save, which will save you about $170 on your monthly mortgage payment, $160 on your monthly mortgage payment. It depends on the loan amount and the interest rate and everything, but it's going to save you, you know, somewhere upwards of 150, between 150 and 180 on your monthly mortgage payment. So, I mean, you know, there's benefits there for the buyer, the way I see it when it comes to the appraisal coming in low. I know sellers don't like to hear that, but you know,
I mean, that's assuming that the seller is going to lower the price because they don't necessarily have to meet the appraisal price. They can actually demand that you produce the cash to cover that gap, or maybe somewhere in the middle, like split the difference.
They can.
Or, you know, they could just be like, well, I don't want to sell to you. I'm not lowering the price. They don't actually have to lower the price, I guess, basically.
That's true. That is true. If it's a seller that doesn't really, they're not a real seller. And what I mean by a real seller is someone who's actually really wanting to sell their home.
Right.
They're not just like testing the waters. But if it's a seller who's like not a real seller, then yep, they could say, no, it's not enough. I want to keep in so I can get what I want for it. And so that's always a possibility as well. But if they are a real seller, having that lower appraisal attached to your property for the next 6 months might not be to your advantage, because other appraisers will be able to see that, other home buyers will be able to know that, hey, this appraisal came in low. This home is not worth what you have it listed for. And so it's going to make it harder for you to sell that home anytime in the, you know, the upcoming months, if you will. So
it's 6 months.
That is,
so there is some sort of like appraiser headquarters system that they all look in, even if you get an independent appraisal, like not connected to a mortgage transaction.
So I don't want to lie. So I'm gonna say I'm not sure, but I believe that there is, because I know that there's a way where appraisers can go in and see if a home has, if there's an appraisal that is currently outstanding on a home. So I believe there is a system to where they can go in, but I'm not 100% sure.
Yeah.
But I will say I've also had a situation in which I had a gentleman who was under contract to purchase a home, had it appraised, appraisal came in for a particular amount.
Mm-hmm.
Gentleman ended up going with a different route through another lender, had another appraisal done because he didn't like the first one. The next appraisal came in $2,000 under the first.
Even lower.
Even lower, $2,000 under the first one. And it was one of those situations where it was like, that's a really close margin right there. Like, what is it that we are we looking at each other's homework, or, you know, what is it exactly? So I'm just, That's why I bring that up, because I'm kind of like, I think you all do have a way to where you can look at another appraiser's work, see if there's another appraisal that's out there, because all that stuff has to be filed somewhere. You know, they got their name on it and everything is not just
Especially if
sitting.
they're a certified appraiser, licensed
Mhm.
appraiser. What
Exactly.
PLC tell y'all? And don't go chasing waterfalls. Please stick to the rivers and the
Oh,
lakes that
not the
you
pin microphone.
He should have just been happy with the first one.
Yeah.
Wow.
So it went 2,000 less, and it dropped a little lower than that after the taxes came in. But yeah, it was an interesting one. But yeah, I mean, the appraisal, to me, it does more to protect than it does to harm the buyer, because it does make sure that the home is worth what you're paying for it, at least if you're getting financing on that home.
Correct. What I don't understand are these cash buyers that want to get an appraisal. Like, what do you expect the seller to do once they see it if you're supposed to be paying cash?
So,
I mean, you know, I know the bank won't lend more than what it appraises for because, you know, obviously the house or the property belongs to the bank until you have satisfied the obligation to them in over years. But, you know, when it's cash and the buyer, I actually consider that a very weak offer. We actually got one, a cash offer for, it was some land, but it was contingent on an appraisal. It makes sense to me.
Wow. Yeah. I will say, if I was a cash buyer, I would still get an appraisal done.
Yeah.
But that's just me.
But to make it contingent on your offer price.
Oh, absolutely. Like,
so you want to, so you want us to lower the price if it comes in lower than what you've offered.
Oh, absolutely, because I don't want to overpay.
Well, then offer what you feel like it's worth the first time. You know, don't just offer what you think is going to get the seller's attention.
Yeah. Oh, you mean like offer, like, oh, you mean like if I offer well above the asking price?
Not even well above, but actually they offered $75K under.
Oh, and if the appraisal comes under
and
that,
they still wanted it to be dependent on an appraisal.
Oh yeah, absolutely. Because let's say they offer 75K under, but the home is really worth 15,000 under that. If I'm a cash buyer, I don't want to give the seller an extra 7,500 just because I got it.
Well, why not?
Because I'm frugal. That 7,500 is gonna make me some more money.
Yeah, because what happens if something happens and then you have to turn right around, God forbid, and sell it. You would at least, I guess, want to know that you could halfway get your money back.
Yeah.
I understand.
Yeah, I mean, I don't think most of those cash buyers are in that situation. But or of like needing to turn around and flip it real quick. But yeah, I'm just really like, unless it's a multiple offer situation and I'm bidding against people, I'm just like, okay, I'm not overpaying. So even if I'm paying like all cash, I'm like, we're gonna do an appraisal. If it comes in less than my offer price, we gon', because all cash is still strong. We're gonna close, but I only want to pay what it appraises for. But yeah, that was just me though.
And I want to talk about appraisal gaps real quick.
Oh yeah.
This is something that I have to explain to my clients sometimes. Like, it really comes down to, you have to have that cash to cover the appraisal gap if the seller is not willing to drop the price to where the appraisal is. But the question really is, how bad do you want it? Because, a lot of times, yes, an appraisal can come in low, especially when a buyer has bid over asking price, or they're trying to win a bidding war. But sometimes the appraisal can come in low, even when when the buyer has stayed within or below their limit for their pre-approval. And in those cases, just because you have the money, like in cash, to cover the appraisal gap doesn't mean that the lender is going to actually approve you spending it to do that, because they have to source where the money's coming from. They have to also make sure that you still have money to cover your closing costs if the seller is not. And you have to account for all funds and expenditures. and they have to be approved by the lender. Like I've actually been in situations where the buyer was like, well, I can just pay more, but the lender was like, no, we're not going to even, because you basically trying to tell them that they really didn't have the funds, or that they needed to safeguard or keep those funds just in case. So
Yeah, and that's reserves. Like there are reserve requirements for some loans. Some, depending upon what your credit score is and everything, you might not have a reserve requirement. But then if you have, let's say, a lower credit score, if you're using non-traditional credit to qualify for the loan, then you might have to have reserves. And in that instance, reserves, for everyone who doesn't know, is just money that you have, liquid cash that you have. It could be in a brokerage account, savings account, checking, that you have that equates to a certain amount of monthly mortgage payment. So if your mortgage payment is $2,000, after you close and pay all your stuff, if they say you need to have 2 months of reserves, that means you need to have $4,000 in the bank, which is 2 months worth of mortgage payments. And so if you are one of those individuals who has to have reserves, then your mortgage company is not going to let you utilize those funds to pay for a higher price home, because they're like, nope, you got to have reserves. So if you utilize that, you're going to need more money to fulfill the reserve requirement. So
it's my money. Y'all can't tell me what to do with my money.
You're right. And the loan is our money.
And it's infinitely more than what you got sitting in the bank. Brother independent.
Yeah. So
blow up at somebody.
The next one they have on the list is the buyer's financing falls through. And so we've kind of hinted at that a little bit, but goodness, I'm not going to get into all of the reasons why your financing can fall through. I'm going to list about 1 or 2 reasons to help you not shoot yourself in the foot, to keep your loan from falling through. So first reason, don't open up no credit cards. Don't open up no lines of credit. Don't go making no purchases that are requiring a loan, i.e. don't go buy no car. Don't go get no furniture on loan or on credit. None of that stuff until after you've closed on your home.
Please.
There have been so many individuals that everything was good, and then all of a sudden they go and max out one of their credit cards. It's like, before the loan closes, oftentimes it can happen like 24, 48 hours before the loan closes. Your lender can do another soft credit check to make sure that nothing has changed on your credit profile. And if they look and see, oh, you've got a maxed out credit card now, and your credit scores, which were in the range for you to get approved, now have decreased because you maxed out your credit card and you now don't qualify. There have been so many people that have actually gotten denied for their loan 24, 48 hours before they were supposed to close, and they were approved just because they went and accumulated a whole bunch of debt that they didn't need in the first place. And it's like, if you could have waited 2 days, 3 days, you would have had a home and you could go spend whatever you want to spend on your credit card, go buy the car you want, but wait until after closing.
DTI, people, DTI.
Yes.
I have one buyer who has been trying to get approved for about 3-4 years, and this particular person keeps buying cars that have like $600 and $700 notes, and it's like, sir, do you need the biggest model that Ford trucks makes? Do you just have to have it? Are you using it for work? No, you're just using it to get to work. Well, can you get a Kia in the meantime? Can you get a cash car? Can you? No? Okay, well then you don't want a house. You ain't gonna have no house to park it at. You're gonna keep parking it at wherever you're renting. DTI matters, because if you go and max out a credit card, what may have been a $40 a month minimum payment now can shoot up to $100 a month. That $60 really counts for something. Just like Frederick just said, with our last point, $20,000 can equate to between $150 and $170 a month. So, we're talking about potentially what, $10K worth of purchase power at 60 extra bucks a month. So, we especially with the interest rates where they are now. So, patience really is a virtue.
Oh, and for those who don't know, DTI, debt to income ratio, which is literally just the ratio between how much money you make every month and how much money you pay every month in debt. So that's what DTI is. If you make $10,000 a month and 4,000 of it goes toward paying debt, credit cards, student loans, car payment, personal loans, all of that stuff, then you have a 40% debt to income ratio because 40% of your income goes toward paying out debt. So that's what DTI is. Mm-hmm. But yeah, you can really shoot yourself in the foot by having your financing fall through. There are other reasons that your financing can fall through, but focusing on what's within your control, because obviously if it's something that's outside of your control, you know, with the lender or whoever, you can't control that. But if what's in your control, make sure you control that.
Yeah, a lot of times one of them also is just when the buyer takes kind of forever to find their home and their pre-approval expires, and then the interest rates go up or their credit score goes down, and the pre-approval, you know, somewhere in between they're under contract, you know, it could fall through. So yeah, we just, you know, because how long do typical pre-approvals last before they expire?
Normally about 90 days. I tell people they don't expire as long as nothing changes with your financial situation. However, like you mentioned, if something changes with the interest rate environment, you could potentially not qualify for the home that you used to be qualified for. Maybe you were qualified for a $400,000 home. Nothing has changed with your financial situation, but interest rates have gone up 1.5%. Now you don't qualify for that $400,000 home anymore. So no, you're right. It definitely could be something external to you that could still move that needle or, you know, cause you not to qualify. But typically a lot of lenders will write them for 90 days. Some will do for 120, but most will do for 90 because credit reports are good for 120 days in most instances. So when they do that hard credit pull, that credit report's good for 120 days. So a lot of them just shorten it up a little bit more than that. And 90 days is when they write those pre-approvals for a lot of mortgage lenders.
And that's when you see back on market due to no fault of seller, buyer financing fell through. I done had to write that a couple times. Let
them know.
Yeah.
Moving on to number 3, a bad inspection. So this one kind of alludes to exactly what it states. Home buyers get a home inspection. That's not just a statement. That is also a directive. That is something that I highly recommend everyone do when they're purchasing a home. I don't care how much of a handyman you think you are, still get a home inspection, because it does not hurt to have a whole nother set of eyes that's looking at that property to see what issues there might be lying in wait for you if you purchase that home. So homeowners, or home buyers rather, that go and get a home inspection, when that home inspection comes back less than stellar, or with some
red on it, just
with some issues that the buyer is not wanting to deal with, or it's more than what the buyer might want to spend to repair or maintain, that could be something that causes a buyer to terminate a contract. And that could actually be, this is actually one of the reasons that I think you should, if you're going to terminate within, you know, for this reason, because this reason usually should take place within what's called your due diligence period, which is the time frame. Well, you can explain it because you do more with the real estate everything, but the due diligence period and how like that's like the, you know, time where people should be actually terminating it and everything.
Yeah, due diligence is typically anywhere from 3 to mostly I see 7 or 10 being the max in residential. When it's commercial, you usually have like a 30-day minimum due diligence period that you'll ask for. But basically, this is your chance to do all the open records requests to see if there's any stop work orders, especially if you know that the previous seller did some little DIY stuff. It's your chance to get whatever inspections that you need. If it's an older historic home, I always tell my buyers to, yes, get your home inspection, but also get your separate, like be prepared to spend a little bit more on your inspections. I tell them, get the plumbing system inspected, the roof, get a separate inspection for that, get a separate inspection potentially for your HVAC, especially if it's not new, like have different inspectors come out. You never can be too sure.
Mhm.
I would rather spend too much money on inspections than way too much money buying basically a money pit.
Mhm.
A lot of people, like if I know people that the mechanic messed up their car, and so because it wasn't drivable, they just stopped paying, and the car got repoed. And it's like, well, no, even if you get a lemon of a house or a car, you still have to pay it. So
Yeah.
don't ruin your credit. Just do what you need to do to make yourself feel comfortable,
Mhm.
because at the end of the day, especially in Georgia, it's caveat emptor, buyer beware.
Yes.
All sales are final, and it's not going to be your realtor's fault. You can't blame the seller, because well, if you can prove that they knew about it, then potentially you could have a case. But who wants a lawsuit? Who wants to? That's even more money, that
Mhm.
you have to spend. So yeah, I was in the article that you sent, Frederick. I was seeing where one of the buyers had asked the seller for 22K for
Mhm.
an HVAC replacement. I was like, what kind of HVAC system is that? I thought it was, well, that must have been a mansion or something. Oh my goodness. And so then the seller found another company that was 15K. And the buyer was just like, well, no. And then they went somewhere else. And, this is one of those things when you don't have a good realtor that will negotiate. And I've told this story before, a current listing that I have,
Mhm.
our second contract that we got, um, the buyer was just like, yeah, well, the water heater was in vacation mode and the HVAC, something had, it wasn't cooling at the time of the inspection, but it was cooling all the way. It wasn't broken or anything.
Mhm.
And the buyer was just like, yeah, we want the seller to completely replace the water heater and completely replace the HVAC, or we're not moving forward. I was like, oh my goodness. I said, ain't nothing wrong with neither one of those systems, ma'am. I'm sorry, we can't. And I was like, ain't no, can we meet in the middle? Can we get you a home warranty? Can we go half?
Yeah, because a 1 year home warranty, anything happens within that 1 year, it's covered. But yeah.
So, but yeah, those bad inspections, it can really, really, it can be devastating, but do what you need to do to be able to sleep at night. And even with a good inspection, the inspector doesn't go into the walls. So you're
Mhm.
still not going to be able to know every single thing that's going to, especially if it's not your first, if you're not the first buyer. But I would want to know that I did all that I could to protect myself. Some people just waive the inspection because they're trying to win a bidding war.
Mhm.
Both
Yeah,
Frederick and I very much so advise against that.
we do. Absolutely. And I will say, um, just really briefly, if you're going to cancel due to an inspection, like Jilly said, make sure you cancel within your due diligence period, because 9 times out of 10, you have what's called earnest money that's on the line. And it's just good faith money that you put forward to say that you're serious with, wanting to purchase the property. Um, if you cancel within the due diligence period, you can get that money back.
Mhm.
And so, if you have your home inspection done right away, or at least while you're in that due diligence period, and you decide to terminate within that due diligence period, you're losing the money you spent on the home inspection, but not really, because you're also saving all that you would have paid for the house, essentially.
Yeah.
So,
The due diligence period allows the buyer to cancel for any reason. And then after that, the only reason that you can cancel and still get your earnest money back would be during the financing contingency period, which lasts usually a little longer than due diligence. And
mhm.
then I guess, well, they can't get their money back if during the appraisal contingency, right? Or can they?
They can, if it
They
comes
can.
in low and if it comes in low and the seller's not willing to lower it to meet the appraisal amount, then they could get their earnest money back because of a low appraisal too.
So those are the three instances where you can get your earnest
Mhm.
money back. But during the appraisal contingency period, you can't use the fact that you don't like the foundation cracks that was found during due diligence. You can't do that. If that is the case, then you actually lose your earnest money. Just like we were past appraisal contingency, past financing contingency, past due diligence, and the buyer found out, because there was a language barrier, they found out at the last minute that indeed they cannot rent out the house because of rental restrictions with the HOA. We got the earnest money in that case, because that was something that was not only communicated to them within 48 hours of going under contract, but it's not one of those reasons that, fall under appraisal or financing contingency. So just got to be careful with that earnest money.
Yes, absolutely, because there could be thousands that you could end up losing, or that you at least have on the line. So moving on to this fourth one, and I think it'd be better for you to lead on this fourth one. So the fourth one is a bad neighbor. I believe you might have a personal experience.
Listen, every story that I've told is about this one house. I'm gonna nickname it Hell House in a minute if I don't get this house sold. Okay, so there was this one client who actually I'm glad that my brother Frederick was able to help, even though I was not. But her and her sister went out with their realtor to see this particular listing of mine. And this one day out of all days, all the neighbors at this point, it's been on the market for 4 months. All the neighbors at this point know that the house is on the market, and they know that it's vacant. They know that the seller moved out, and the HOA prohibits street parking. And so they decided to use their neighbor's driveway, which is my seller, this particular day when they went to go see the house. And then next door, I guess they were rearranging the garage, and there were several men in the yard with their shirts off. And I'm just like, of all day. And the lady was so interested in this house. And we had, Lord knows, we had been trying to sell it. We had 3 offers, and all of them had fallen through for one reason or another. None of them the seller's fault, And so her sister calls me, and she's like, is this how this neighborhood always is? Well, we want her to be somewhere safe. She's single, and she's coming from Alabama, from somewhere, out of town. And we just want to make sure that she's safe. And I'm just like, no, I don't know. I've never heard. This has never happened. And so, and honestly, and I told her, I said, if I was in the market for a house, was approved for that amount, and I didn't mind living in Timbuktu, I would have purchased the house, but all of that to no avail. They still didn't purchase it. So and she didn't even look twice. And
they had their shirts off. They weren't wearing no shirts, and I could see their underwear. They were sagging pants.
And what's so crazy is the model that the buyer eventually ended up purchasing was in the same neighborhood, the same exact floor plan. Like, they didn't even, how sometimes the kitchen be on this side. It's the same floor plan. It's just that the kitchen be on this side and the living room be. No, I'm talking about it was the same exact floor plan as the house that I was trying to sell. But because of what the neighbors did that day, turned her off. And there was no convincing, especially when somebody's coming from out of state. They don't know you. They don't know the area. And they want to feel safe before they actually realize whether they're actually safe or not. And it's just,
yeah.
I'm sorry, y'all. I got a little PTSD. Y'all pray my strength in the Lord.
It cost you a whole home sale. You should go and bring those neighbors some cookies.
Man.
Yeah.
The other day, my client went 2 days ago, and she said the police was backed up in the driveway and using the driveway now as a post-up spot. They're gonna think it's drug trafficking and human trafficking going on. Why are you posted? I said, it's that sign in the yard. We got to get that sign out the yard.
Yeah, the police just sitting there, and then your potential buyer comes up like, "Oh, I'm sorry, is this your house?" No, but this is the best place to catch them criminals, though. This is the best house in the street to catch them criminals.
Catch all the criminals going in and out the neighborhood. Golly. We on the contract though, y'all. We on the contract. We passed due diligence, so we doing good right now. Praise God.
We're making progress.
We're gonna get to the closing table this time. Fourth time's a charm.
Oh goodness, yeah. I don't have anything else to add. I don't have anything else to add to that one. Moving on to number 5.
Yes.
cold feet or overwhelmed. So that just speaks to, home buyers that you're making the biggest purchase of your life. And it's like, I would say second to, getting married in terms of, life decisions that people make. It's one of those decisions that it's like, oh, you want to make sure, am I making the right move? Am I making, there's nerves involved and everything. And you have some buyers that get cold feet and they're just like, oh, no, I can't do it. I can't. And I've actually spoken to some of these buyers who were under contract, backed out of like 2 or 3 contracts because they were like, I got down. And then a lot of times what it tends to be, not all the time, but some of the times from the conversations I've had with buyers who have walked away from multiple properties, someone gets in their ear and they start listening to, family or friends or whoever. Oh, you don't want to purchase that. There was one individual that I actually was working with who, previous to them coming to me, and I didn't even end up helping them purchase a home too. They did eventually purchase, but prior to coming to me, they were under contract. They had a friend that told them, oh, you're not ready to be a homeowner yet. You're not ready for that monthly payment and, the maintenance and the upkeep and everything like that. And so it's just a lot. And I asked them, I was like, was your friend a homeowner? And they were like, yeah, they were a homeowner. And I was like, and they were trying to deter you by telling you weren't ready to be a homeowner as well. They're like, yeah. And, it started making sense with everything they were saying, like, oh, I'm gonna have to be responsible for this and that and da da da. And so they backed out of the contract.
Based off of the person's experience, and they probably brought a jalopy, and
you just never know. Yeah, because it's like you can get a house and the maintenance is fine. You don't have a lot of maintenance expenses. A home inspection can help you remediate some of that. Those upfront costs that you might have, or at least know what you're walking into. But that and overwhelm, on the other side of the cold feet, with people getting nervous about, making the biggest purchase of their life, the overwhelm is all that's involved with purchasing a home. And it is a lot.
Stressful.
It is a lot.
It is.
It can be one of the most stressful things that you're going through because you have a mortgage lender who, there are some great mortgage lenders that really do try and make the process as smooth as possible. But it's a lot of paperwork that they are requiring because the guidelines that are not written by the mortgage lender, these are federal guidelines when you're getting an FHA loan or a VA loan or a USDA loan. And they're Fannie Mae and Freddie Mac underwriting guidelines if you're getting a conventional loan. So there are a lot of things that these guidelines are requiring. There's identification, but then there's a verification of your employment, verification of your income. They need to see that 2-year work history. They need to have a residence history. They need to see your assets, and they need to see the last 2 months of your assets. They need to see so much. And then it's like, if you have debt, they need to see your credit, and they need to see your debt, and they need to verify how much debt needs to be paid off if you have to have debt paid off. And it's so much stuff that they're going to be asking for, documents after documents after documents. And it's going to seem like it's never ending list of documents. The funny thing, while I'm speaking right now, I just got a text, not just got a text, but right before we started this episode, I got a text from an agent that I'm working with. I sent their buyer email earlier today about documents that we need, and they're like, oh, I already provided all those documents, which one they did, but then they didn't. So some of the documents were already provided, others of the documents weren't. The documents that were already provided were provided like 45 days ago, and we need the most recent 30 days. That might be another thing that you end up battling, is that, oh, I gave you those documents. It's like, yes, but you've received 2 more pay stubs since you last gave us those documents, and you haven't closed on a home yet. So we're going to need those most recent pay stubs now. So yes, you did give me documents, but now we need the most recent stuff that you've received. And so in addition to the stuff that you still haven't gotten me, but in any case, it, like I said, it gets a lot because, you know, oh, you got another bank statement that came out. We need to see that last bank statement too. It's like they're gonna want to see all of that. And then again, you go through all of this work. Don't screw it up by going and maxing out your credit card or, you know, charging up money on your credit card at all. And then they do that, you know, soft credit check before you close and find out, oh, you've got debt that we didn't account for that you've, you know, had since we started this loan process. And now that delays you even further, or it gets you to the point to where you don't qualify. So there can be a lot of overwhelm. But
and I done told y'all, don't go off on Frederick now. He's just doing his job. Get mad at him, you know, and be going off on him because he asked you for the document again. But I think that can really just add to the frustration, especially if there's a delay and the delay is like a week long. And in that time period of that week, another statement came out. They are going to ask you for that statement. So that just compounds on top of the fact that you're already frustrated that there's been a delay. And now they're asking for the most recent documents. But, you know, I would imagine that there have been some people who literally can't take the pressure and have backed out simply because they were overwhelmed, not because they couldn't qualify, but just literally they were tired of all of the bureaucratic red tape, for lack of a better term.
oh, absolutely.
Go through that. And that's crazy. And that's why I always coach my buyers, especially the first time buyers. You may get frustrated, but don't give up. This may be the hardest thing that you've done, but this is also the most money that you're probably ever going to spend at one time in your life. So it's anything worth having is probably not going to be that easy to achieve, and it shouldn't be. But the fact that it's going to help build you wealth will absolutely be worth every amount of frustration in the end. I promise you. I promise you. And I have a couple of reasons why. I have a few of my own personal reasons why contracts fall through. And one of them for me is the buyer's indecisiveness. You know, the realtor doesn't tell them, you know, look, you can't still be sending me homes and we're under contract on a property.
Yeah.
Don't still home shopping, stay off of Zillow, Redfin. Don't you send me not another home, you know. You're still shopping. It's just like almost like you done got married and here you are down at the club. What you doing in the club? What you looking for? You better go home. You know,
Just want to make sure I made the right decision.
You should have thought about that a lot. You got to think long and hard, y'all. Another one is life changes such as a major one. And I think I feel like you and I discussed this like last week, but death. You know, the death of either the seller or the buyer, obviously, but the seller especially. Sometimes that sale is not going to just go ahead as you know, it might have to go through probate. It usually cancels the contract by default, you know. Health changes, you know. I think there was I feel like it was you I was talking to, but there was a lady who was given a certain amount of time to live, like she had cancer or something. And she actually ended up living, but she was going to be able to get out of the contract due to her health changes. So that could be, it's not as common, but it's another reason why a contract might fall through. And then just bad agency, you know, if the real estate agent is not being responsive or the buyer is unhappy with their agent, they can fire them at any time in writing. And along with that, a lot of agents have what's called a protected period. And so if that means that if the buyer then goes and chooses another agent but still wants that same house, that buyer cannot purchase that house for another 90 or 120 days without owing that first agent that they fired their full commission still, in addition to the agent that they do want to work with still has to be, you know, pay their compensation. Most of the time the sellers want to do that, but at some point between two agents needing to be paid, that buyer's going to have to come out of pocket to someone at some point. And most buyers just aren't willing to do that. And so they drop out of the race completely, or, you know, if they just have money to blow, they may move forward. But yeah, bad agency, not giving good customer service, not trying your hardest to do what's in the best interest of your buyer. Buyers can tell, they know, and they can see that. So just be careful. But yeah, that's all I had.
I agree. I agree with all of those. So yeah, there you have it. The reasons why buyers typically are dropping out of their contracts, and hopefully this at least sheds a little bit of light on some of the things you can do to navigate more wisely the home buying process, so
Yes.
that you don't end up in a situation where you're losing earnest money, or you're in jeopardy of putting yourself in jeopardy of not qualifying for the loan by doing something silly. So yeah, hopefully this has been beneficial. Make
I
sure
like this one. This one was fun, Frederick.
yeah, I like the stories. You got a lot of great stories and encounters that, yes, I have not experienced, thankfully, but also thankfully you have, because it makes really good story time.
Yeah.
But no, make you tune in on Fridays, dropping another episode every Friday. Greatest Asset Community Podcast. Tune in on Tuesdays for Home Finance Hacks, 7 p.m. Eastern Time, going live. And till next time, take care, be blessed, and we'll see you next week.